Hello and welcome to this week's edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. Coming up on the show today, we'll be talking to the Chief Executive of Kaching. He'll be telling us more about how this ticketless parking app is making life easier for South African consumers. And after that, we'll be discussing the outlook for RMB Holdings and how the group is navigating these economic pressures within the banking sector. Later on, I'll be joined by a panel of experts to discuss the latest Universum Ideal Employer Rankings and what it is that employers look for when it comes to choosing the work that they want for and what type of environment that they want in terms of workplace satisfaction. So this is balancing what the employee and employer both want. Before we get into all of that, do remember that we welcome your comments, so email or send them to us. You can send it through to moneymatters@abn360.com. But first, let's take a look at this week's Killer Trade. The banking sector is under pressure globally, and sluggish performance of local banking stocks should be expected. In December, we saw a massive 17% drop in the FTSE JSE Financials Index, and Nedbank has been the worst performer so far, with its share price declining more than 7%. However, for the 6 months to end December 2015, RMB Holdings increased the normalised earnings per share by 8.9% year on year to 258.8 cents, while the interim dividend per share increased 16% to come in at 142 cents. Well, in studio with us here in Johannesburg for a change and not in Cape Town, to take a look at the outlook for RMB Holdings is Finweek contributor Moxima Gama. Moxima, lovely to have you in studio here. Let's kick off by finding out what the biggest challenges that are facing the global banking institutions are at the moment.
It's a litany of things. At this point, a lot of investors are kind of wounded or still skeptical about what happened in the financial crash in 2008. So they are kind of getting into the banking stocks, but cautiously so, which means that if any type of information comes out, there's still that dark cloud over those financials that it could cause quite a crash in the with the banking sector, which is understandably so. I mean, it was quite a big crash, and because we're so international banks are such a big deal for us, we kind of emanate what happens there. So if they go down, our banking shares also kind of pull back at the same time. Another one would be the speculation with the US Fed. I mean, although they did kind of at least say it won't be, they mentioned that there won't be 4 hikes, but at least 2, which kind of reassured investors, but the question is when. Yes. And that now affects commodities, and a lot of the banks are now invested in commodities. So it's such a little stew, but effectively it's about looking at individual shares in the banking sector and see which is outperforming the other.
Over the past 2 weeks ago or so, there was a lot of banking stocks that were reporting their numbers, and almost every chief executive that I spoke to was talking about how challenging this economic environment is, saying that they may be looking at an increase in their non-performing loans and so forth. RMB Holdings has fared better though. Why is that?
It's because it's more of an investment holding company. Under its portfolio, it then has OUTsurance, Discovery, MMI, but their biggest investment would be 34% stake in FSR, First Rand. Mm-hmm. And under that, there's then West Bank, and there's RMB Bank, as well as the new acquired Ashburn investments. So having that acquisition, so it's not like they're a proper bank that will have all the expenses incurred in a bank, but they get their money or their income stream from all the investments. So it's kind of like they've got a whole basket of all these investments, and they get from their good results, they're then able to post good results, which they did. FNB has a very good, rather good balance sheet. So whatever they do, what their good results gets translated to FNB. So that's how they can generate the income stream and are able to create, at least have a good balance or financials in the banking sectors.
And yesterday's decision by the SARB to increase interest rates by 25 basis points, what impact is this likely to have on the banking sector?
It's both negative and positive in a sense that it does, and when it's positive, it increases the net interest income, which is the revenue minus any liabilities they incur. But the negative in the sense that it's put pressure on the consumer, and already the consumers are quite pressurized. And this will then mean there could be possibilities of defaults in bonds, loans, increasing the bad debt. So there is that little spin-off with that, which they're going to have to try and work with at this point to generate good income.
You would have to navigate through these very turbulent and uncertain times. Moxima, thanks so much. That was Finweek contributor Moxima Gama. Up next, we'll take a look at this week's Editor's Choice.